he wasn't able to videotape it, so hopefully you guys took notes. That'll be the second one. Rebecca's going, what? He's done? Didn't take me that long to get in. All right, you're back. What do we got here? All right, I'm not going to get real carried away. I'm not going to run a join me, Lloyd, because it slows everything down too bad. I don't want to get real carried away on charts tonight. I want to go further than that this time. And I got a little extra credit thing for y'all at the end if we don't run out of time here. If I get a die-hard crowd that hangs around late, I'm going to show y'all something that I'd be willing to bet probably 90% of this room has probably never even heard of, and a higher percent of them probably wouldn't know how to do it if somebody asked them. So we got time at the end here. I'm going to chunk this little extra credit thing in here. Let's get going here. What you're seeing on your screen here, I don't give all my secrets away, but I give probably too many of them. Here's another one for you guys that have sat through the chart class in the last class that I did. This is the second class I'm doing. It's probably going to be the last one. I'm going to try to cover everything I can. Not the last class I'm going to do. The last class I'm going to do about Think or Swim. Um, I would love to do some classes over time on the different option strategies that I know some of you guys would like to learn, like the iron condors and butterflies and racial spreads, and there's just so many different ones out there. I wouldn't mind doing some classes and putting a handful of those in one class and teaching them. So it's not the last class I'm going to do, but the last one on Think or Swim. All right, I got another chart going here. Real quickly, I'm not going to get carried away on setting this chart up, but I wanted to show y'all something. It doesn't work perfectly with every stock, but it works really, really well with a lot of stocks. And it also works really well if you're trading futures. Okay? It's one more chart setup that I'm going to give you guys. I'm not going to go through all the studies as to how to do it at the end of the class here, at the end of the night. I'll just I can share the link in here so that you guys can have the chart itself, but we don't have to actually go through setting it up. What this chart is, it's another one that I use that I set up a while back. This chart, what you're seeing here is just, I used to build these really busy charts, and I think I said this in the last class, that oftentimes when you get a busy chart going, there's too many things that you're waiting on to give you confirmation, and a lot of times it'll talk you out of a trade, or sometimes it'll even keep you in a trade longer than you want to be, because you have so many things you're waiting on to be right, and they don't all get aligned perfectly. So you sit back and you don't make trades. And I thought, I love the day trade. I used to love the swing trade. It doesn't work quite as well as it used to, but I do love the day trade when I do have the time, and I love the scalp stuff. So I thought, my objective is to come up with simpler charts that allow that to take place without having to have a bunch of messy indicators on there. And I've narrowed this stuff down to that. I gave y'all a couple chart setups last time. I'm going to give you one more tonight. This chart setup that you're looking at here is just two simple moving averages. I believe they're simple. I think that one may be an exponential. Hang on, no, that's a simple, and that's a simple. Okay. All I have going on here is this blue line is the 44-day moving average, simple moving average. Same one that's on your other chart. I think since I did the last class, if any of you guys, I know several of y'all have used the chart setup, I think you found out that's kind of an amazing setup with that 44. None of us have really figured out why it works, but it does, and we don't question those things. For right now, it works. They could change that, but there's a lot of things that you can watch on, that you trade, from futures to options to whatever it is you trade, stocks, and they bounce off that 44. So that's a valuable line in there, that blue one. The other line that you see is a 14-day moving average, and you're going to say, well, wait a minute, what's the difference between this and the last chart that you had? The last chart that I have was a time chart. This is not a time chart. This is a tick chart, okay? If you look up in the corner here, you'll see it says, right here, I'm going to circle it if I can find it. It says ES, that's what's trading on here, the ticker. It says 1 day, 42 tick. Okay, so there's another odd thing. I like odd things. I like odd things that work. Okay, so what I've got here is a variation of a chart you guys have seen in the past, and it has a blue line of a 44-day moving average. Okay, simple moving average. It has a 14-day moving average, the yellow one, and it's not a timed chart. It's not based on a 1 minute, 5 minute, 10 minute, or any of that. It's based on the number of ticks. Okay, a tick is an order. Unless you have Tourette's, then it's something else miserable. But other than that, a tick is an order, And when an order comes through, that is one tick. It doesn't matter the size of the order. So if there's 10 contracts, that's a tick. Okay, it's going to show as a tick. If there's 100 contracts, it's going to be a tick. So what this thing is doing is it's counting the orders. Okay, so with a 42 tick setup that I have going here, if you look down on the bottom right, it's counting them down. You can set that up in TOS. And as you'll see right now, it's not counting down very fast because there's not a whole lot going on, as far as orders with the ES at night like this. But you can see it's counting down. During the day, this thing really flies. Okay, you can see it's down to 24, 23. So it's counting down the orders that come through. All I want you guys to do, again, I'll share the link at the end of the class here. I want you to open it up, launch it, and then just test it against some stocks that you trade or futures or whatever it is you use. And I think you can find that you like it. It does work with a lot of them, but it doesn't work with all of them because, and the reason for that would be because the tick setting is pretty low at 42. And some of the things that we trade, there's a lot more orders coming through than what a 42 tick chart can really support and give you any kind of real direction. It's just going to happen so quickly that the thing's going to be kind of knee-jerking and going all over the place real fast. But the other, there's a lot of stuff you'll see that does actually work. I'm going to scroll back on this here. What I want to show you here, one of the important things you're looking for on this chart, it's a key thing to look for, and you probably have never looked for it in the past on charts, but I want you to look at, we've already talked about what I call the ghost RSI here. It's my ghost RSI. I've blacked out the internals, and it only shows you the overboughts, oversolds, and we had that discussion in the last class. What I've got here, if you'll look at the yellow line, what I look for here is the angle that it's going to come through the blue line. Okay, that's real important. If that thing sets itself up at a really steep angle, because of the combination of the time frames here of a 44-day simple moving average, a 14-day simple moving average, and a 42 tick setup, because of that, typically you will find if the angle of that yellow one is pretty steep, it will follow through. Okay. How far, we don't know. But we definitely know that if you'll look at this little point that I'm circling right here, it's not going to do a quick turnaround and change back right there. It just doesn't happen. That's the beauty of this chart setup. Okay? So what you're looking for, so if you're in a trade and it's coming in here at an angle and it starts to flatten out with this blue one, if the 14-day yellow one flattens out, that's not an entry for you. That's not what you're looking for. You're looking for this thing to be so angled that it's like a 75-degree angle. And as you can see where I'm circling here, we missed some of the downward action on that thing, okay? But that's okay, because it could have very easily flattened right out and went right back up again. So, we can guess all day long at stuff. What we're looking for is concrete things that give us some direction going forward. And in this particular case, again, keep in mind, you need to check it with your stocks and make sure it works for your stocks. I got several I use that it does work, which is what made me able to build this chart like I did. So look right here. That's what you're looking for. Yes, you missed a little bit, but you got a pretty hard confirmation right here that it's going through. So whatever it is you're trading, whether it be ES futures, whether it be Apple stocks. Now keep in mind, do a little bit of back testing with this thing, because when you're trading options, you have all the option Greeks working with you or against you, like the theta and the deltas and stuff. So even though you get a cross through here, get yourself some justification that it's going to follow through at a decent amount on the options that you like to trade, because oftentimes this thing may give you a straight cut through there. However, the option spread on Priceline or Apple is so large that you can't actually get anything out of it. So it's real important that you back test it with what you're used to trading. Now, as you can see in this case, if you were trading the ES, it was a no-brainer. As soon as it cut right through there, if you would have taken the entry right there, right when it hit the blue thing, you would have got something out of it. In this particular case, you would have got 1 point. Okay? What I'm looking for down here is, this is an exit for me. I don't know what you guys want for an exit, but when I see 5, 6, 7 candles that all pop the same support, and it seems to get stuck there, I'm done. I'll get out. Okay, so in this particular case, if I was trading this ES, I had a really simple entry right here. This first candle wouldn't have told me anything. Second one wouldn't have told me anything. Third one, this doji we talked about in the last class, I probably would have got out. On the green doji, I definitely would have got out. But when I start hitting support here like this, I'm out. Now, as you can see, but we don't trade in hindsight. As you can see in hindsight, it still had some left to it. Actually, it went down another point or two. But we don't care about that. You wanna be disciplined and trade with structure, and that's it. You want to say, okay, here was my entry, here's my doji, here's my green doji. I got support, got hit. I'm out. I'm out of that trade. Don't care what happens from here. And then you sit back and you wait. Sit back and wait for the next setup to come in. So now you guys can't see this. I don't know what time we're at. This is about 11 o'clock today. So I want to look. I'm going to scroll over here and see what it did. Okay, we got another breakthrough there. So again, if you were trading ES, as you can see, it went flat. It went flat. Now, one more thing I want to tell you. Don't counter trend trade against this setup. Okay, if the blue line is on a strong downward slope, don't be real quick to enter right away with a cross like this. Let that blue line turn itself up. Okay, so you can see if it had crossed right here, I wouldn't have trusted the cross unless it was a really, really sharp angle going through there. And you'll learn to detect this stuff. I've done this for so long with this chart that it comes naturally, and it will to you guys too. But in this particular case, we got a slight turn up on that blue one. So I probably would have taken it because the angle was pretty steep right here. Okay, I'm going to keep going here. You guys can see where the yellow one went through, so we keep going here. All right, look. Now you guys can't see what's coming from here. Would you do anything here? Okay, from what I just explained with this chart, if you'll look on the far right-hand side, would you do anything here? Okay, the candles are green. Wow, they're going up. What a great place to enter. Well, is it? Well, according to what I just said, no, not at all. It's not telling you nothing here. This thing could go either direction. So if you train yourself to be a very disciplined trader, you will train yourself to win more often. Okay, in this particular case, it worked. Okay, but we don't care. All right, so right here, well, I shouldn't have gone quite that far. Would you take it here? All right, what do you notice here? The blue line is turning down, and the yellow line is crossing through. So at this point, we would have missed some of it, as you can see again. We would have missed a little bit here, but not a whole lot. But we got our confirmation here that if you'd have gotten in right here and you were trading this, you'd have got in at 2,095 on the ES, and that would have been your entry. It's not going to, like I said, it's not going to, if you look right back here, it didn't cut through at a sharp angle. It came in flat. So that's why we said, no, don't take the entry there. So that wasn't an entry because we didn't know what it was going to be. Here we know that it was coming in at an angle that was steep enough. The blue line, the 44 is turned down, the yellow's turned down, it's crossing through. You're going to get something out of it because it's not flat. It's not going to turn around right away on you. Okay, it's not just, as you can see, based on how the chart looks, it's not going to make a quick turnaround. All right, so had you gotten in at the cross there, that was actually a pretty good trade. If you were trading ES, you would have got. This is during the day also. This isn't something I've made up. I'm showing you how this works. One more chart setup that I'm sharing with y'all. It's probably going to be the last one. But had you got in here, does every trade work? No, absolutely not. But if you're disciplined to say, okay, I got in right, everything looked right, but this one's just not going against me. My discipline, risk level is 1 point. So if it goes a point against you, get out. Okay? Maybe you're on the wrong side, maybe you're not. But either way, if that's your risk tolerance, get out. Okay? In this particular case, it would have worked again. I would have gotten out again. See the support hit here? Remember I told you when it switches colors on that on a spinning top doji, I'm out. Okay, so when I got two here, I got a third green one. As soon as I got this green doji, I was done. I was out. I get out. Don't care what happens from then. And I sit back and I wait for it to set up again. Okay, so as you can see, we would have made two entries here and both of them would have worked. Okay, we'll probably, I just kind of scroll over, so I don't know what's coming any more than you guys do. So we may get a losing one here. And that would actually be good because then you guys will not get such a sense of thinking that this thing is 100% bulletproof. All right, who would enter here? I'll give you all those parameters at the end of the class here on this one. Would you enter here? No. Exactly, right. Good job. Wouldn't. It's not telling us what we want to see. Okay, so look, we didn't get nothing there. Yes, it happened to go down, but we didn't see that coming. So we didn't risk a potential losing trade on it. So we're still waiting for a setup. All right, so what about, let's see what we got here. What about here? You trust that? Keep in mind, we don't care what the candles are saying. And if you guys will notice, let's back up here real quick. Let's go back to the amazing characteristics I said that this blue line as a 44 simple moving average has. Look at how these candles have all hit that thing. The wicks have penetrated, and it was resistance, and it fell from it. Look how many times it hit it. Why it hits that thing like that, I don't know, but it does. But that was what we had talked about originally, how it's kind of a magic simple moving average, and they hit it and they fail. Okay, here, let's look at it right here. Raj, are you saying yes, you take an entry here? I don't know what's coming. Um, all I can see is it did make a cross. Does have the MACD cross. It's building the histogram blocks. And we got our first little red RSI line here for the overbought. If you were in the first class, you'll know that's actually when you want to get in. So let's see what happens here. See if we get it to work. Whoop, wrong way. Sorry. All right, we got another win. All right, there's our three. Actually, we got to take them as resistance up here. I probably wouldn't get out until I got a red doji candle, which may make me a little late getting out. But if I want to stick to my guns, like I told you down here, off a red one, the green spinning top got me out if I was playing it short. In this particular case, a red spinning top would get me out, okay, from the top side. So if we hit resistance up here, which we've hit several times, I don't see a red spinning top in there. So if I stick to my guns and my plan, I would not be out yet. That makes sense to y'all, what I was saying there? And now you can see that I still would have got more out of it. Did that make sense? On the bottom down here, if I was in short, when I hit support this many times and I get the green spinning top doji, especially the second one, I'm out of that trade. I'm not short anymore. Over here, we got in on the cross, right there. Now, I wouldn't have jumped the gun this quick on this first one, but in this area here, if I would have gotten a full point out of it, I'd be looking for my red spinning top doji candle telling me that it's probably going to change directions. We didn't get one in here. Okay, so I'd still be in this trade. Let's keep going here until we get it. There it is right there. I'm done with that trade. Works well with some, Michael. That's what you guys are going to back test. I'm not going to do it for you, but it works really well with some. Okay, here's my red doji. I'm out. All right? So I'm out of that trade if I was trading the ES again. I'm going to do one more and we're going to move on. All right, she fell flat. Let's look at it here. You in or you out? Got our first oversold blue line down here. This is all down. We missed a little bit of it, but it sat flat for a while. Would you take a short position here in the ES? Is that a steep enough angle for you? Somebody give me a yes or no. Okay, so Danny's going to take it short. Let's see if he gets a win out of it or a loss. Boom, got another nice win. All right, enough about that. Now you guys got another moto chart set up that you're going to be going, dang, how's he figure this stuff out? A lot of time and a lot of hard work. All right, good job, Danny. You got a nice winning trade there. All right, let's go to a couple other things here. Click on your trade tab. Do you guys need me to help you set up an options chain? Just give me yes or no. If you want, we can do it real quick. In Think or Swim, if you'll click on your trade tab, underneath here it says all products, Forex Trader, Futures Trader. If you click on the Futures Trader tab underneath your trade tab, this will list all the different commodities that trade and the futures that you can trade. In this particular case, I've got YM, which is the Dow Minis. I got NQ, and I got the ES. I got some. I think I got silver on here. No, I don't. If you click on the little down box next to it, that gives you the list of all that they have. Okay, all the available commodities you can trade, the ES, all that stuff. YM, it's all in there. You can change those for whatever you want. Okay. It also tells you in here the quantity times the tick and how much it pays. So in this particular case, if you're trading NQ, it says quantity, one tick equals 25 cents. So a 25-cent move on NQ pays or takes away from you $10. Okay, this is a pretty neat little feature that Think or Swim has built in here. A lot of you guys say, well, how much margin do I have to trade it? How much does a CL pay? If you guys are trading crude oil, what's that paying you? That's where this stuff is, right here. You can go in here and you can change these to whatever you want. So in this particular case, the ES, We go to the first box over here. You can see that it says quantity tick. They're wrong on this one, which is kind of ironic because I said something to them. They still haven't changed it. They got quantity tick equal 0.25 equals $25. Well, with the ES it equals $12.50. Okay, they got two mistakes here. Yeah, it is, Rebecca. They for some reason they've doubled two things. One of them is how much it pays, and the second one is how much the margin is. ES is the only one I've found that they have wrong. I thought it was kind of funny that I found it. They haven't changed it yet. I said something to their people about it. In this particular case, with the quantity of tick, a 25-cent move on the part of ES Futures is worth $25, and the margin is actually about $5,600. So for all the rest of them, this is good. At one point, silver was one of the highest ones. It required about $19,000 in margin to trade silver. It didn't have to make very big moves, and you can make really big money or lose very big money. Okay, enough about that. Next one's Active Trader. That's where you can get your ladder. You can use a simulator on Think or Swim if you want. I do not have a funded account with them, so I don't use their Active Trader for anything. I'm going to go back to all products here. Real quickly, if you guys, this is where you can get your option chain. So when you see us talking about an option chain and you don't have one or you can't find it in your broker, you can real quickly get one right here. Okay, and I've got my filter turned off. I've got it set for single. You can click on that spread where it says single, and it will give you several different combinations of things. You can look at different setups for, it'll shortcut it for you. I personally like to do it manually myself. If I'm going to do an iron condor and I'm going to do a credit spread on the put side and a spread on the call side, I like to look at the numbers. I'm kind of a hands-on person. I want to manually calculate what the thing's going to cost me, or I want to manually calculate what the credit is on that iron condor if it happens to be credit. So while you can get them to do it for you, I do it myself. But right there where that says spread, I leave that on single. You can do it in there and go on your condors and see how it's giving you the iron condor setups. You can go in there and you can set that on a straddle, and it'll give you different straddle setups. So basically it's doing the homework for you. But again, I don't use it. Now on this next one, on the next box here, on this one that says layout, if you will click on that, go down to where it says custom, and this is where you can customize that thing to have the columns that you want. Okay? In my particular instance, I want this thing to only show me the delta, the gamma. Okay? In my particular instance, I want this thing to only show me the delta, the gamma, the theta, the net change. I have one in here called probability in the money. There's a percentage that I want to see that tells me what the percentage is or the chances for that option to go in the money. Okay? And then I have the volume. Yeah, I'm going to show you the correct amount. I'll let you guys do that. I don't want to get sidetracked reading it. Leonard's really good at this also. He knows this Think or Swim quite well. And in fact, when we get done here with the scan portion of it, he's going to give you guys some links that you'll be able to put in here that he's written some scripts to. And in here they call it a think script. And those scripts will give you, and those are tough to do. He's writing stuff that you guys can put in here, and it will do different things in a scanner for you that are not what would be considered comes out of the can from Think or Swim. There's a lot that comes out of the can, and I'll show you that. But for the guys that know how to write script and stuff and know how to do that, there's even more that you can have, and he'll show you guys how to do that. I'll show you how to get there. He'll show you how to use it. All right, I got volume in here. I've got open interest. That's the one I really like because lately here I've been doing a lot of open interest plays. I got a high and a low. That's all I got in there, okay? That's where you set that up. So now when I hit OK on that, if you'll look here, I've got my delta off to the left. I've got my gamma after it. I got my theta. And then I've got my, let me stretch that a little further here so you guys can read them. All right, so here's my delta, my gamma, my theta, my net change, my probability in the money, the volume of the options. That's one of them we use a lot. We want to see what's going on. Open interest is the big one that we like to use lately here, especially on our Thursday night doubles classes. I want to see what the high is, the low is, the bid, and the ask. So I've got that on the call side and on the put side. Now under strikes, Sometimes you want to punch that thing to all, because when you're doing an open interest search, there may be some deep in the money puts or calls that aren't going to show up on your standard defaults that this thing gives of 4, 6, 8, 10, 12, and 14. Okay? However, you can also go in there where it says 14 and manually enter it. I like to have 20. Okay? So I'm going to go in there, I'm going to manually enter 20, and I'm going to hit enter. Okay? So that allows me to bypass their default system of 14 strikes, and it allows me to have 20. Okay? Now, if I find an options imbalance, I will then go in further. If I find one that's back in the money, I'll go in there and type about 25 or 30. I want to go deeper. I want to see if there's any more in there. The one I put out yesterday, let me throw it in here. It is not working yet, but I am not convinced it's not going to. And I'll show you why. You guys are watching my screen here. This is one I went into yesterday. It was probably a little premature, but I posted that in the room that it might be a little premature. I didn't think it would quite get beat up. The spreads kind of stink on this thing. I didn't think it would quite get beat up this much. But if you'll look here, this SKX, one I got in yesterday, got about 56 million shares traded in volume today. It has a 10,081 sitting on that 2850. You do the math on that, 10,081 contracts times 100 times 2850 is right now almost $4 in the money. That's about what? I don't have a calculator. Somebody do 10,000 times, well, times 10 would be 100,000 times 100 would be a million. That'd be a million times $4. That one strike alone has little over $4 million of deep in the money calls sitting there. Okay, so when I saw that, I wrote my own scanner in this Think Or Swim in the scan portion that finds me this thing. It's the coveted scanner that Leonard and Lloyd have tried to get me to cough up, and I haven't yet, and I probably won't. I got to keep something to myself. I got to have a little bit of an edge over the same room that I teach. So here's what I saw on that. You guys see that 10,000 sitting there? That's what I saw. So what was the next thing I did? I thought, well, let me look and see if that thing has any more than that. So I went in here and I hit all. Okay, well, actually it does. If you go back here on the 2650, it has 9,919 in the money, even deeper at 2650. Okay, so now we got 2650, which is what? Almost $6 in the money. So we got almost $6 million of in the money calls sitting there. All right, so if you are disciplined with these trades like I am, and like I try to get you guys to be and teach you, you're looking at this yesterday with me, and you're saying, okay, there's $5 million of deep in the money sitting at 2650. There's $4.5 million sitting at 2850. This thing only trades 5,699,000 shares of volume in a day. Are they really going to pin this thing and leave $10 million that deep in the money on this garbage little stock? I didn't think so. So I took the 30 strike puts yesterday and I bought 5 contracts. All right, so I gave 20 cents for them. They're at 0 and 15 right now. I gave 20 cents for them, knowing I had $100. That's either going to win really big, and my saying is it's either going to fly or it's going to die. Okay, if it dies, I don't care. From a technical standpoint, I have something really good to base it from here. I'm basing it that there's $10 million worth of in the money calls on this thing, so I'm not too concerned if I stick my $100 bill on this 30 strike and it goes against me the next day. I wasn't trying to win with it today. My only concern was at one point yesterday, they had those things at 0 and 45, okay? So all the way back to the 26, they had them, if you look back to the 25 and the 24 strikes, they still have those at 0 and 45, 0 and 35. So my thinking was, I don't want to, in answer to the question right there, the first strike that had anything above 0 was the 30 yesterday. Today it's the 30.5. So the first strike that had anything higher than 0 for the bid was the 30. So I thought, okay, but it was, if you'll look at the 24 strike and the 2350, they have 0.45. That's how it was yesterday. And I thought, I'm not going to, first of all, pay them 45 cents. And if this thing works tomorrow, meaning today, I may be forced to pay them 45 cents if it started working already today. So what I did is I split it with them and went after the market rankers to see if they would fill me. They wouldn't fill me at 15 cents, okay? So here's the risk I was taking. There's zero bid, 45-cent ask. I'm in there at 15 cents. Let it sit forever. They wouldn't fill it. As soon as I moved it to 20 cents, they filled me and they pulled that thing back, okay? From 45 cents, they pulled it down to about 30. So that was the first strike that I had that then became the next strike that didn't have a 0/45 on the bid and ask. So that was the reasoning behind what I did here. Okay, knowing that today it could potentially go back to the 45 and be stuck there or go to 0. In this case, it's at 15. But it doesn't change the structure behind the technical setup that I'm playing it on, as you guys can see. There's zero volume on both of those strikes. Will it work? I don't know. Will I lose $100? I don't know. Don't really care. I'd love to see it work. So I've already told you why I picked the 30, and this is the kind of thought process I put into these things before I give them to you guys in the room. All right, so we determined why I picked the 30. Now, let's say they just do decide to go in here and clean some of this up. All right, so if they go to the 28.50 strike, just to clean up that 10,000, we're $1.50. Okay, so I got them in for 20 cents. They went to $1.50. They cleaned up that 28.50, 10,000. We went from 20 cents to $1.50. What's it, about 800%? I'll take it. I got $100 on it. I'd go up to what? 1,500. Or no, 750. Excuse me, because I only got 5 contracts. All right, so let's say they go to the 26.50. If they go to the 26.50, we got a what do they call it in the room? A boom, 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 a big time boom. So if they go in there, keep in mind, all through this whole process, I got $100 on the line. My $100 doesn't look quite so good today because I'm at a 0.15, but that's okay. That was a risk I took versus having to pay 45 cents for it today if it went the other way. So I'm still sitting there with $100. This is the play I got going so far for Friday. I'm not totally convinced that they won't try to crush some of that out of there. So now you guys got a little better explanation of why I'm in that, and why I'm still in that. It wasn't supposed to work today. It's supposed to work Friday. All right, any questions on the option chain? Real quick. Yes, always played weeklies on those. Yep, when we go for the double plays, I'm looking for the weeklies. I found, and you guys, I'll tell you this up front, I found that on the monthlies, when the monthlies expire, especially the quarterlies, they're not as quick to pin these things. The open interest doesn't seem to be as much interest to them to get it pinned. They don't. I've played some, and they just don't work near as well on the monthlies, the third week, or on the quarterlies. They don't pin them. The weeklies work great, usually. All right, so now you see why I'm in that one. Any questions on the option chain thing? All right, Market Watch. Okay, a couple different things. This Market Watch tab. There's a few different things you can do with this Market Watch tab. All right, click on that. You can there's two ways or a couple ways to approach this thing. You can click on, if you look where it says Lloyd. Now, hang on here a second. Market Watch. That wasn't what I wanted to happen. Go in here and we'll find Lloyd's again. Lloyd, EMI crossover. All right. Several weeks ago, Lloyd told me, he said, hey, Moto, he said, I know you can write scanners in Think or Swim. He said, can you write me a basic scan on an ADX, an average directional index? You guys probably heard of the ADX. That has a D plus and a D minus, okay? Directional indicator plus or minus. He said, can you write me a simple scan that will show when the green one crosses the red one? In other words, the plus crosses the minus. I said, sure, no problem. So I wrote the little scanner for him, okay? So what this is doing is every time you write a scan on this scan tab, okay? Every time you write a scan, I'm going to find that one here real quick. Let's see. What I'm doing here is I'm going over to the little 3 bars. Over the years, I've written a lot of scanners for people. I get people all the time. Some of them are vindictive and they want to see if they can stump me. I had a couple guys in a couple other rooms that say, "Hey, Moto, you're good at writing scanners and Think or Swim. Here's what I want to scan for." And they feed me all this garbage thinking they could stump me and I wouldn't be able to write their scanner for them. Well, inevitably, nobody has stumped me yet. Now, that's not to say I can write one in the class right in front of everybody. That was extensive, but you give me a little bit of time, I can guarantee I'll write that thing. So what you do is you go over each one of these scans that I wrote for people. I give it a name, and I usually give it their name. Then I know who I wrote it for and why. Okay, so in this particular case, this was when I'm on the scan tab, by the way, right now. Okay, this is a real simple scanner that I wrote for Lloyd. He said, "Hey, write me a D plus, D minus cross so that I can see when they're crossed." Okay, so if you'll look at this thing here, what you're seeing here is it gets you on your scan tab. It allows you to do some different things here. You can add filters for stocks, you can add filters for options, and you can add study filters. The study filters is the most complex one, but it's the most comprehensive one. It gives you a lot of the information that you're looking for. And what the scanner will do for you guys, it'll eliminate a whole lot of groundwork for you if you learn how to write the scanners in Think or Swim here. Okay, so what I'm going to do is I'm going to start with a simple one. Going back off of here, this one's already written. So going back to the Market Watch, if you click on this little box right here, and it would let me go back in here and find that scanner again. Okay, in this particular case, it was a Lloyd DMI crossover. When I click on it, now what I have here is it's showing me the exact same tickers that the scan found for me. But the difference is this becomes what's called a dynamic scan. Okay, so depending on how the scan was written, if I wrote the scan that I wanted to find me stuff from open, then it's going to find me stuff as the day progresses that meet that scan criteria. And in a dynamic Market Watch atmosphere, they're going to start to show up in here as they fall into meeting the criteria that I've given it. So in this particular case, all I've asked it for on Lloyd's behalf is give me a certain amount of volume, a certain amount of price, high and low, and a D plus cross. I've told it get where what I want, and I wanted it to cross. Okay, so now in the Market Watch tab, in a dynamic version of it, as that criteria is being met, they're showing up in here. Okay, so during the day, if you let this thing run, and if you have multiple monitors like I do, you can let these things run, okay, on separate screens. And I name them so that I can quickly look at this one. It says Lloyd DMI Cross, so I know that anytime anything comes in here, it's crossing the D plus over the D minus to the upside. Okay, so that's how the Market Watch tab is. Now you can also use this Market Watch as just something where you want to develop your own watch lists, and all you do there is where it says Lloyd's name there. You click on that, and you go down here to create watch list. Okay, and then you give it a name. In this particular case, you can have lots of different watch lists. Okay, these are your personal watch lists. These are not going to change as far as the tickers until you erase them or add them. So I've got one that is oil stocks. Okay, so what I do is I go find a bunch of oil stocks. I want to track the oil industry. I want to track the miners. I want to track the drillers. I want to track all the stuff going on with oil. So I built one that I call oil stocks. Okay, you may want to build one that says Lloyd's Room Popular. Okay, and you put Amazon in there, and you put Baba in there, and you put Apple in there, and you put Google in there. And you build one for maybe the 10 to 15 stocks that are consistently looked at and discussed and played in the room during the day. Because at that point, then all you have to do is click on that watch list, and all the stuff they're talking about is right there in front of you. It's not mixed up into a bunch of stuff that's being dynamically scanned, or a list of if you look at the left side, that's my general list of stuff I like to watch. If you look at the left side of my screen, it's just a general list. There's no rhyme or reason to it. There's a big array of different types of stocks in there. So that's my general one. But I have specific ones, and this is where you would build it. You give it a name, And then as soon as you give it a name, you would give it you put a couple ticker symbols in there, and it's going to create one, and then you got to, you'll save that. And then you'll have that market watch list. So you'll have one for, in my case, that's for oil-related stocks. I may have one for semiconductor-related stock. I may have one for banking or financial, where I put a list of all the banks in there. And it allows me to click real quickly on it and see if all like the banks are tracking together. I can click on that market watch and it'll tell me, hey, here's all the banks. Here's Goldman Sachs and J.P. Morgan and Bank of America. They're all listed in one market watch, and you may pick up something that nobody else sees by clicking on the one tab and saying, hey guys, all the banks are up big today except Wells Fargo. Why aren't they up? And somebody may be able to answer them. But it gives you a one-click access to an industry or a sector that can show you real quickly, and then you'll also be able to see any discrepancies when they all come up. All right, enough about that. You guys understand a market watch? Anything you want to add on that, Leonard? Okay, yeah, you good. You're going. You got it going. There you go. All right, let's go back to the scan tab. All right, here's what I want to show you here. What I'm going to do is I'm going to rebuild this scanner. This one's about as basic as it gets. Okay. What I'm going to do is I'm going to go over here to the right. I'm going to detach it. Okay. So I've detached that scanner, and I made it a new window. I'm going to hit scan. It's going to produce me the exact same results again. However, this time I'm going to go over here on the right. I'm going to X everything off the one that I had. All right. Now I have no scanner. Okay. Now, first thing we want to do, everybody follow me on that? What I did is I took Lloyd's scanner of his D plus, D minus cross, and I detached it into another window over on the left. And now I X'd out everything on the right-hand side. I'm going to rebuild the thing so that you guys can see how to build a scanner in here, okay? There's really simple ones, and you can build really technical ones. I don't want to go into building tons and tons of really technical scanners tonight, because once I show you how, that it's kind of a personal preference thing. Some of you guys may like certain crossovers and want to build those. Some of you guys and gals may like when a ADX, or I mean a RSI gets above a certain amount. So it's a personal preference thing. So you guys build whatever you want. I'll just show you how to build them. All right. So the first thing you want to do is we want to add stock filters. Okay. In stock filters, if I click on that button where it says add filter for stock, it sets my first line in there. Okay. What I want to do then is click on this ask, and I want to scroll down here to volume. All right. So click on the button that says add filter for stock. This is a stock filter. All right. Then click on next to the word where it says stock. I'll scroll down in there and hit volume. Okay. This particular one, Lloyd had said, hey, give me 1 million volume minimum, which I'm going to type that in there. Okay. Why do we want 1 million volume? Well, typically, if a stock has less than 1 million volume, it doesn't have liquidity in the options. So then you're battling options. So why battle them? Why not try to filter that a little bit right from the get-go by putting in there 1 million? And a lot of you guys may say, hey, that still doesn't give me the kind of liquidity that I like. I'm going to put 2 million or 3 million in there. I do 2 million a lot of times. I try to pin my scans down so they do so little work, so they require so little work on my part when they're done, that they've done all the homework for me. And you can do that real easily. And oftentimes you will get to where it's so tight that it doesn't produce results. And that's when you got to tweak it a little bit, because you're trying to narrow it down to stocks that specifically are exactly what you're looking for, okay? And by doing that, sometimes you can get it too tight to where you get nothing out of it. All right, real important little key thing here I want to tell you. Every time you add a line, okay, obviously volume is not a line that's going to corrupt this scan. But as we get going here, it's a really good practice to hit the scan button, okay? Every time you add something in the scanner, hit the scan button, okay? This one gave us 1,471 results, okay? The reason I say that is because if you just go to town building yourself a scan and you get all done and you hit scan and it doesn't work, it doesn't give you anything, and you're looking at it and go, oh, wait a minute, okay, all I'm asking for is a 20-day moving average cross, a 50-day moving average cross, 1 million volume, blah, blah, blah. You go through 6 or 8 things and you're like, there's thousands of stocks that still meet that criteria. Well, you kind of did yourself a disservice by waiting until you had 7 lines built to find out it doesn't scan. You did yourself a disservice by waiting until you had 7 lines built to find out it doesn't scan, and it didn't scan after the 3rd line. Okay, so now you're spending a lot of time backtracking trying to figure out what you wrote incorrectly inside of the scanner to fix it so that it doesn't not scan anymore. So as you build it, go in there, hit the scan button on the right here, and make sure it still produces results. Because a lot of times you'll get to a point where it's starting to really narrow them down, and then the next thing you add goes to no results. So you can say, okay, I like that line, but I've got it a little bit too tight. So say you got it as you're looking for delta 70s or something, an options filter, and it just doesn't find anything. So then you change it to delta 50, and all of a sudden it starts giving you results. So what you're doing is you're not backing up. You're always working forward and not going to an end point where you have to stop and then completely backtrack and figure out what you screwed up. So you can avoid that. All right, next one. Let's see, that's our volume. The next one, if you look on the left side here, is still another stock. Okay, still another stock filter. So we're going to hit the Add Stock Filter for Stock button again. It's going to default to the ask size. And in this one, we want the last. Okay, and all I'm redoing is building the same thing I have over here on the last slide. So again, now we have a stock with volume of 1 million. And we have a stock that says the last, and that's it. Okay, in this particular case, Lloyd had asked me, he said, do stocks that are $5. We type $5 in that minimum, and he said a maximum of $500. Okay, so we go over here to the right-hand side and type in $500. All right, so now we have a volume line, and we have a stock line that says last, and maximum or a minimum of $5, maximum of $500. Don't forget, hit your scan button. Obviously, we know it's still going to bring a bunch of results. Well, we did trim it down from 1,460 down to 1,016. So we somehow trimmed 400 stocks out of there by presetting this minimum maximum amount. All right, the next line, he's got one more line in here, and it's called the study line. All right, so you want to go over here to your 3rd button on the right. First one says Add Filters for Stock. Second one says Add Filters for Options. Next one is Add Study Filter. Click on that one. It's going to put your next line in there, and it's going to default it to an ADX crossover. Okay? Well, how convenient. That's what we wanted anyway. But that's the default. All right, go all the way over to the right here, and you're going to see right next to the D, there's a white D, a white box with D in it, and there's a pencil next to it. Okay? Click on that pencil. All right, once you click on that pencil, I'm going to get rid of the ADX crossover by hitting delete. That's their default. Okay? The default always comes up as an ADX. So click on the delete. Let me go back to that again so you guys know I'm going to exit out. On that ADX crossover study line that put in there, the 3rd one, I'm running my arrow across there. Stop at the D. That stands for daily. That lets you set your time frame. We're going to leave that on daily. With a little pencil, you'll have a D, then a pencil, then an X. X gets rid of the line. Hit the pencil. Hit the delete, get rid of that one, and go into add condition. All right, so now in this particular condition, when you click on that line, it's going to let you add a value, which is a number. It will let you add a study, which is where we're going to get this one from. So what I'm going to do is I'm going to scroll down through the list of studies that they've given here, and I'm going to find the DMI. And it should be in here. Maybe not, because it's under ADX. Oh, no, where'd it go? DMI, there it is. Okay, so scroll down. I clicked on the box that said study. I scrolled down to where I found the DMI, and I'm going to double click on it. Okay? Now, what it did there is on the left side of this thing, it put in the DMI. Okay? And it shows it as the D+. See right down there. See where it says DMI on top and it shows D+, DI+. We can change that if we want to. We can change it to a DI- or an ADX. this particular case, we're going to leave it as a DI plus. What Lloyd had asked for is he said, I want the D plus to cross the D minus. Okay? So now we've got it where it says DMI on the top, D plus. We're going to go to the middle here and we're going to select crosses above. So what we've told it so far is we want the DI plus to cross above something. Okay? Well, over on the right-hand side here, we can pick several things that we want it to cross above. We can pick a value. We can say we want it to cross above 100. Or we can go in here and we can pick a price. Or, we can pick yesterday's close. In this particular case, he wanted it to cross above the D minus, so I'm going to go back into the studies, and I'm going to find the DMI again. Let me see where I got that thing. DMI, there it is. All right, so I'm going to double-click the DMI again. But this time I've got to go down into the box here where it says D plus and change that to a D minus. All right, so what did I tell it to do in this edit condition box? On the left side, I went into studies. I went and scrolled down until I found DMI. I selected the DI plus. And in the middle, I selected crosses above. And then on the right-hand side, I went to studies and found the D minus. And so what I told it is D plus crosses above D minus. Pretty simple, huh? You can do that with virtually anything out there. Anything you guys ever wanted to do can be done right here. You can do a 5 moving average crosses of 20. You can do a 20 crosses of 50. You can do an ADX is greater than whatever. You can do an RSI is greater than 90. All you're doing, and it will always be in this one box here, you're editing that condition. You can go in here and in the study parts on the left side say RSI, and then you would go in here and say is greater than, is greater than. And then on this side, you would click on the value and put 80 in there. Okay? That would tell you any stocks that come up with an RSI greater than 80, which that's getting pretty overbought. We like to see them go overbought on our charts, but about 70. So if you go in there and put 85, it's going to put RSI stocks that are above 85. That's what you'll scan for. So let me hit save on this, and now it's going to add that line in there, and I'm going to hit OK again. Now I've built the exact same scanner that we have on the left side. So if I hit the scan button again, it should produce the same results that the one on the left side did. And it does. All right. So what I did is I rebuilt the scanner from the left side over to the right side. Everybody follow me so far? I know it's a little technical, a little bit. You got to understand there. But we're going to go through a couple of these examples so that you grasp it. You guys on board with me still? We got 52 of them in there. Okay. Hey, we made it to 50, so I can keep going with my class. Awesome. All right. Now, okay. So what happens here? This list of stocks that you see on the list here that it populated, I'm going to get rid of the one on the left. All right. I made up, let's look at something here. Here's a chart. Let me find a chart. I'm going to put a stock chart up here. I know you guys have seen this. You've seen stock charts, okay? Now, on that stock chart, if you'll scroll down, this is the free version. I've got mine set with a 50-day, 100-day, 20-day move, Bollinger Bands. It's got a MACD and ADX and a slow stochastics. What we want to do, let's go in here and change, go down to where it says ADX, D plus, D minus. It's not going to be that as a default. You're going to have to set it as that. So the first one says MACD. The second one says ADX line with a D plus, D minus. Click on that, get that put in there, and hit update. Okay? All right, so now what do we have here? We've got a 50-day, a 100-day, a 20-day with Bollinger Bands. We've got a MACD, and we got an ADX with a D plus, D minus. The green line you see here that I'm circling is your D plus. The red line is your D minus. So now let's back up. And let me slide that over. And let's take some of the stocks that showed up in the scanner, ONDK. Put it in there. Ooh, there we got it. Look at our D plus, D minus. The green D plus crossed the red D minus. Crossed it up. So There's the first result that Lloyd was looking for. Okay, that's a little extreme. Okay, so let's go to the next one. APIC. I would be willing to bet that it's probably going to show it crossing. There's a little better cross right there. Look at that. We still got the exact cross. Okay, we got that exact cross of the green D plus through the red D minus. That's all we asked the scanner to find us in these search results. Okay, not a bad looking stock deal either. Keep in mind, all these green ones on here fought a heavily down market today. Okay, so in a down market, this particular scanner that we wrote is actually finding stocks that beat that out. You're like, okay, well, that's pretty cool. Well, I've got another scanner that I wrote in here that's for what's called tough stocks. It's stocks that are on a momentum and they're trending and they don't care what happened today. That's where it becomes fun writing your scanners. Okay? When you write scanners that tell you, hey, we had a huge down day, but I want to find the stocks that have strong momentum. They're called tough stocks. They're resilient. They don't care what happened today. They still go up or they still go down on big up days. You can write it for both directions. So in this particular case, as you guys can see, are you following me on my stock charts here where you can see the D plus barely crossing, right? All right, so got that all done, gave it to Lloyd, and he said, great, thanks, appreciate it. Then I got to thinking, okay, I want to refine this thing a little bit. It's still kicking me out 39 results. I don't want to go through 39 results. I want to pin that down a little tighter. So what I did is I took his one that I built him, and here's my Lloyd DMI crossover number 2. All right? I changed a couple things here. Here's what I changed. If you'll look at the first line that says study, it says D plus crosses above D minus. We had that on Lloyd's, but it says from 2 bars ago. So go over here and click on your pencil, okay? And click on edit. To me, it's an edit. To you guys, you got to change it. All right. So if you'll look on your right side here, right where I'm circling, where it says DMI offset 0, that's today's trading. Okay. We still have the crosses above, I'm sorry. And then on the right-hand side, it says DMI offset. I changed that to 2. What have I done here? I have asked it to now scan for stocks that made that D plus cross 1 or 2 days ago or in the last 2 days. Okay, so it's not going to find me stocks that it just happened today, coincidentally. Now again, keep in mind, with the way it's already conditioned, if we open in Market Watch, and it's open in there and it's running as a dynamic scanner, as they cross, they're going to come into there. They're going to show up. What I did is I revised this thing and I told it, I want to see stocks that have a little bit of momentum today. So show me the cross 1 day or 2 days ago. So as you can see here, I've identified the cross of the D minus with a 2. That's what that's representing right there. Y'all following me here on this? No, yes? Maybe? Okay. I'll go through one more time. We've opened up the conditions. I have my DMI on the left side here. It shows 0. That's for today. Okay? Then I clicked on crosses above, and on yours it says DMI 0 over here. So all that says is show me ones that the D plus crossed the D minus today. By changing the 0 on the right-hand side to a 2, that's saying show me a search result that shows where the D plus is crossed in the last 2 days or 2 days ago, 1 day ago, 2 days ago. Because that's a different type of scan. Now it's going to show me some potential momentum that started a day ago or a couple days ago, not just today. Yeah, but Sandman setting in, what does that mean? So now I'm going to hit save, and that was the first change I made to it, okay? So I'm going to hit save, and I'm going to hit OK. So that was the first change I made to it. Now, the second change I made to it is I happen to know, and you guys may know this on some stocks, that when that D plus gets in the 20 range, 25 range, it's a mediocre trend. When it starts to get above that, it starts to show a little more strength in the trend, in an upward trend. So what I did is I said, I defined another line here, okay? So if you'll look at the next study line that I got, I'm going to click on the pencil on it, okay? It's going to open up our study condition. Yours won't have this. In fact, let me X mine out and we'll build it. I'm probably not being fair and taking stuff I already haven't done and just showing it to you. So I'm going to X that out. So we want to be D plus is greater than 30. Okay, I just got rid of that study set. So let's say you got your next one built just like I do. I'm going to hit my scan button and I'll bet you it's going to reduce it down. Let's see. I don't know what it'll do. If it's going to give me more or less, because we're asking for a D plus cross from the last couple days. I don't know if there'll be more stocks or less stocks that cross. But don't forget, backing up what I said earlier, every time you hit a line, hit scan. Okay? Because we can protect ourselves from putting an incorrect description in here by having it show no results. Okay? When you know that what you've put in there should produce results. Okay? So now I hit it and it dropped it from 39 stocks down to 16 stocks. All right, so let's go back over to our stock chart here. That's still showing, and let's put the first one in, OZM. All right, now if you look at it, that one made the cross yesterday. All right, so now you're looking at OZM and you're going, okay, so that thing has really got some momentum going. It made it to the 20-day and it broke through. The D plus crossed yesterday. So what did this do for us? This took us into searching for stocks that have a little better momentum and followed through with it in the last 2 days. Because we got the cross a couple days ago and it still has it as of today, so that's why this stock looks like it does. And we had a big market down day today. So not a bad looking stock, not a bad looking chart. And that small little refining of the change on that thing produced a little bit better looking one, HDP. Let's go to it. All right, how do we get slid over there? All right, look at HDP. Next one it shows up. It made the cross yesterday also. Is it yesterday or today? Made the cross today. Is it today or yesterday? Either way, again, down market day, not a bad looking chart, huh? It showed us another stock that had volume come into it, quite a bit of volume compared to what it used to, and it has the D plus crossing. All right, so yeah, we're still good. This little guy here, I don't know what news came out on them today, but this darn thing shows up on almost every one of my scanners that I wrote that have anything to do with bullish. This W, next one that's showing up. They did something because they show up on all my scanners. But it has what's called a golden cross here, first off, where the 50-day crossed the 100. The blue line crossed the red line, if you look on my stock chart. That's called a golden cross. A lot of people lead you to believe that when the 50 crosses the 200, that's a golden cross. And that's actually called a bullish cross. A golden cross is when the 50 crosses the 100. All right? Don't particularly like that the 20-day is turning itself down and crossing through those, so it's sending a little bit of mixed signals. However, it did get a nice bounce today. It's created a big gap, got a nice up candle on a down market day. Go down here to the D plus, D minus, and it crossed. Put one more in there, but you can see all of these are showing me a cross from yesterday. I haven't found one yet that shows a cross from 2 days ago. We'll try a win. That's that resort place, isn't it? All right, there's one that crossed a couple days ago. Still not a nice looking chart, huh? Bad day, volume came in on this stock, bad market day, nice looking chart. If you look at the stock charts here, this one had it crossed a couple days ago. So as you can see by the little tweak that I made on the scanner for Lloyd, it showed me stocks that didn't just make the cross today to where you're still guessing at them. You know, you're saying, okay, it made the cross today, but can it hold the cross? Now I'm finding stocks that it made the cross in the last day or two, and they have a trend, they have momentum, and they're showing up as being good stocks on a poor market day. All right, then I decided I got to have one more thing. I still got 16 results. Let's find the really, really, really strong ones. So let's go in here and add another study filter. So you got your three tabs: add filter for stock, add filter for options, add study filter. Click on add study filter. It's going to default you another one for an ADX crossover. Click on the pencil, delete the ADX, go to conditions, click on studies, go to find the DMI again. Let's see. And I'm going to put is greater than. Okay, in this particular case, DMI, the D plus is greater than, and I just happen to know that a strong trend direction on a DMI is a 30. So in this particular case, we're going to hit, on the right-hand side, we're going to hit value, and we're going to input 30. All right, so we're telling it, hey, I want to know when the D, all right, so we're telling it, hey, I want to know when the D plus on a DMI, the directional movement, is greater than on the right-hand side, 30. I'm going to hit save. I can assure you, now we're looking for really strong stocks. When I hit scan now, it's going to really thin the herd. These are going to be even better results. Boom, look at that. Now we're down to 5. So now we can say, okay, we've tweaked this scanner and it's stuck. It didn't produce us 0 results, but it brought us down to 5 results. So now we got the original 39 results that we got from the original scanner that was simple that Lloyd asked me to do. I've narrowed that down by tweaking it a little bit to 5. So let's put the 5 in here and see what they look like. OZM. I think we already looked at that one. Now it's got a cross from a couple days ago, and that if you look at the D plus, it's at 30.67, so it's above 30. That's a strong directional trend. Okay, so from a bullish standpoint, that's a very strong direction. You know, it's a trend. It's a directional trend, is what it is what the DMI is. And in this particular case, this D plus is now above 30. So let's look at this other one that's showing up on here. Save, S-A-V-E. It should be above 30 also. Yes. Okay, another good looking stock. Not sure if it'll make it through that 50-day because it's showing up as resistance now on the stock charts. However, had 3 nice days in a row, didn't have any gaps that it has to back up and fill. Yes, it's being recorded, Andrew. It is. Doesn't have any gap it's got to fill. Look how it brought in additional volume all 3 days in a row. 3 days ago it was 1 volume. It was increased volume yesterday, increased volume today. So it's completely oblivious to what's going on in the market around it. And we've tweaked the scanner here just a little bit so that it finds us these stocks that don't care that today crashed. And that one's got a DMI plus of yeah. I mean, this one you gotta look at it and say, okay, you know, it's got 3 nice days up, but it is at the 50-day. Is it going to get stuck here? Who knows? But it did. It is. You guys got to admit, it's finding nice looking stuff on a crappy market day. And how ironic! Look at this. SKX. Thanks, Lloyd. Thanks for that scanner. SKX shows up on it. That's the one we got that we're playing puts on, if you guys remember right from when I started tonight. SKX showed up on his strong trend momentum scanner. Well, I sure hope they rail that 10,000 in the money, deep in the money calls by Friday. But again, you got above a 30 on the D plus, and the chart doesn't look too bad. But we're playing this one on open interest, and we're hoping that they try to balance some of that huge call open interest at $10 million and knock the thing down. I don't think too many people put a whole lot of thought like we do into open interest. So they just look at it and they say, hey, the trend is up, the stock looks good, everything's crossed, life is good, and they play it bullish. They play it with the trend, and they play it with the herd. You know, they follow the direction that the market maker drags everybody in. And, you know, you guys and me are seeing something on the back side of this with that open interest on the call side. And if indeed they fix this for us, like I'm thinking they will, then all these long players are going to be completely clueless what happened come Friday morning. They're going to be like, man, the thing goes up, looks good on the charts. How come when I get in and it goes down? Well, it went down. If it goes down Friday, it went down for a reason. And the reason is the call open interest. So that's our technical reason why it should go down. However, out of the millions of stocks out there, thousands of stocks out there, this particular scanner, it shows up as one of 5. All right. All right. Everybody following me so far? You still with me? Did I lose you? Need me to go over anything again? Making sense? Okay, cool. I'm going to close this mic off for 1 minute and go fill up my glass full of water real quick. I'll be right back. Yes, we can use an option filter. I don't write straight option scanners. Okay, you can write a scan that will just completely scan for let's see, it added that option one in there. You can scan for just option stuff. I don't like to scan it because it gives you option tickers, and I don't like to use option tickers. You can set up scanners that have, a change in implied volatility. You can set up scanners that have a delta that meets a requirement you want of over 60 or 70. You can set up an option scanner. You can do a full-blown option-only scanner. And I know some of you guys will want to play around with that. I do. But I don't use it because it's going to kick out all option tickers. And, you start getting 6ED7215, and you're like, 6ED2750, what's that? So all my scanners are stock-based. However, I do put option filters in there, and I still get results from a stock-based standpoint, but I put an option filter in there, which is how I'm finding these OI imbalances. And that's the only one I'm not going to share tonight. Let me put it on hold. All right, I'm back. All right, so there we go on that. There's a couple other cool things on this thing. You can go into the option hacker, and and you can go into the spread hacker, and you can make, you can write, like this one says underlying price, probability of profit, max profit. There's different things. These are all new things that Think or Swim has added. This one's pretty cool. I don't know if you guys even knew this existed. On your scan tab, if you click on the spread book, it actually tells you what's going on. I don't know. One of you guys might be able to answer this. I don't know if these spreads that are showing up with the, I'm going to put a different ticker in there. We'll put Apple in there. But it's showing you what's going on as far as different spreads that people are writing. Now, I don't know if this is specific to Think or Swim and the ones that TD Ameritrade is doing in the market. I haven't researched it. It's a new feature that they put in here called the spread book tab. or if this is just everything that's going on. Based on the quantities, I don't I hate to even say it, but I don't think it's everything that's going on because there's a whole lot more going on than what shows up in here. So I'm thinking this may be specific to TD Ameritrade and what spreads they're filling, iron condors, diagonal spreads, calendars, strangles. So it's kind of a neat thing. You can watch this during the day and you can see what's getting added. Leonard, you might know. That is that in a webinar. Let's see, TOS users only, TOS 100% sure. Leonard, do you know on this spread book if this is just stuff that TD Ameritrade is filling? Or does anybody know? Okay.
No, Moto, it's 100% TD Ameritrade. They've mentioned that on the webinars.
Okay, I had a feeling it was because there would be a lot more in here than this. So that answers that question. What's in here is this spread book is showing what TD Ameritrade is filling. It's kind of interesting to watch because you see people doing different vertical spreads and iron condors. And what's really interesting about it is you'll see stuff come through here that you don't normally see. And I like to dissect that kind of stuff. And I'm going to try to find one here. Here's a perfect example. Most of you guys, if you know anything about, I didn't think they did. Um, Most of you guys, if you know anything about iron condors, um, normally you put an iron condor on as a credit, okay? And if you'll look in here, you'll see a lot of them are credits, but every once in a while you see one as a debit. What that is they've created a reverse iron condor, and you don't see those quite as often. And I found it interesting in that I went and dissected their play to see what their objective was. Because most credit spreads, iron condors, you put on a credit spread on the put side and a credit spread on the call side, and you want it to stay within the boundaries of the sold short legs, and that's how you win, and you collect a credit for that. On a reverse iron condor, their strategy is the opposite of that. So these are interesting. You'll see if you know anything about different types of plays that are out there. Like there's some stuff called ratio spreads. And there's what's called a back ratio spread. I saw one of those show up in here yesterday, and it was an odd play. And I'm thinking, there's some odd stuff that people do out there. So it's interesting to watch because if you guys understand, and I know a lot of them in this room do, the different types of plays, you can see stuff that other people are putting on, and then you can look at it and say, well, okay, that makes sense. I kind of like that trade, and you may decide to follow one of the trades. If you see a huge one come through, then you may say, well, gosh, they must know something there. They got a whole lot of money to burn. You may say, hey, there's a vertical spread and all that. I wouldn't consider that huge, but there's an Apple vertical spread right there where they did a put spread on a 108 100 put with a 5-cent debit. The 11 contracts. So obviously they didn't spend any money on it, but you do see the larger stuff come through. So it is kind of interesting. I let this run sometimes on another screen just to see what's coming in. And if I see something big come through, like this iron condor, this is interesting. It's an iron condor, and they did 50 contracts, and it's a debit. So you've got to dissect that play to find out why they did an iron condor as a debit rather than a normal credit. Interesting little thing they added here. Let's go back to the stock hacker. Here's where we started. All right. They may have done it wrong. Actually, you can do a reverse iron condor. Your objective is you get an extremely cheap debit, but rather than have it stay within the constraints of the short legs, they become your long legs, and you actually want it to go outside of that leg. You want it to go through the long legs, which are your closer strikes. You want it to go outside of that. It's still capped off on how much you can make because of the short legs on the outside of the play, but you get a super cheap debit just that the stock has got to make a pretty decent move. It's kind of like basically a strangle with a cap on it to where your broker doesn't hammer you because you tried to do a short strangle. So they're calling it an iron condor. It's actually not. All right, let me go in here. Got everybody on board still on the scanners. Let me look at another one. I'm going to find one a little more complex. There's let's see, where's this? Let me find one that's not quite as. Got bunches of them saved. Let's see if that one's an easy one. Okay, here's one. This is a lady in one of the other rooms. Um, all right. What she asked me for, I'm thinking I changed this one a little bit. All she asked me for is she said, can you show me how to write a scanner in Think or Swim or as a momentum scanner for stocks that are momentum stocks where there's a couple different ways momentum stocks can be played. Some of you guys know how to play them as a 4-8 cross. Some of you like to play them as a 5-10 cross. I know some of you guys play them as a 13-21 cross. This particular one, she said, just write me a scanner that the volume is 1,000,000. I'm not going to go real deep into this one because I already showed you how to do some of this stuff. In this particular one, we added a stock filter, and it was volume. She wanted it over 1,000,000. Somehow that got out of there. Okay, she wanted the stocks to be from $1 to $25. She said those are that's the range of stocks that I played. And then the first study filter I added in here, she said I want to close today that was greater than the close 1 bar ago, meaning yesterday. If you remember right on the left side, we would have said just, here, I'll do that one real quick. We'll click on the pencil. We'll go into edit. You'll see how I got close. She wanted the close today is greater than the close 1 day ago. That's why I put the 1 in here. Okay, simple little scan line. We want today's close to be higher than yesterday's close. Hit save, hit OK. All right, so there we've asked it to have today's close higher. Then she said, I like a 4-8 cross. So what I did is I went in here. I'm going to put the pencil again. I'm going to hit the edit. I went in here and she asked me to use an exponential moving average rather than a simple moving average. So in this particular case, if you'll look, I went into study. Okay, I hit study. I went and I found moving average, exponential. Find it here. Moving average. Where are you at? Oh, help, I go the right way, wouldn't it? Moving average. It'll be in there. Moving average, exponential. See it right here? So moving average, exponential. Now I go down here to the bottom of that where it says length of 9, and I change that to a 4. So she asked me to have a moving average, exponential, 4-day is the length. That crosses above, so I selected crosses above. Same thing, go into your studies, find the moving average exponential, and then go down here at the bottom and change this one to an 8. The default's going to be 9. So on this line, I told it I want a moving average exponential of a 4-day to cross above a moving average exponential of an 8-day. That's a momentum scanner, okay? So now when I added that line in there, now it's telling it, find me stuff where the 4 is crossed the 8, okay? And the last thing I added in here, she said, I want to know that the close from 1 bar ago is greater than the close from 2 bars ago. In other words, what she's asking for here is she said, I want to know that the close from yesterday is higher than the close from 2 days ago. Okay, so now we've got 1,000,000 volume. Hang on a second, I'm going to fix that because I already screwed that up. 1,000,000 volume. And the maximum, somehow 4,000 got put in there. I'm going to get rid of that. All right. So we've got a simple scanner here that says I want a 1,000,000 volume. I want the stocks to be from $1 to $25. I want the close today to be greater than the close yesterday. I want an exponential moving average length of 4-day to be crossing through the 8-day. And then I want it to close yesterday to be greater than the close from the day before. All right. I hit scan and let's see what it gives us. It gives us 4 stocks. So even though this is a pretty simple scanner and there's thousands of stocks out there, we've defined this thing so tight that it only produces 4 results. I'm going to put them in the stock charts here, SFUN. And we'd have to go down here and change our simple moving average to a exponential moving average. They'll let me. Yes, exponential moving average. We got to change that to a 4. On stock charts is where I'm doing this in case y'all are trying to follow me here. Exponential moving average, 8. And hit enter. All right. So what are we looking at now? Well, we still got Lloyd's D plus cross, so this one would have met that criteria. You'll look at it right here. The D plus green is crossed the red, so that's still met. Volume came in, and now my two moving averages up on the top here are a 4-day moving average crossing through, which is the blue, crossing through a red 8-day moving average. Now, if you'll look, it did this back on November 10th, 11th. It crossed through on the 11th, but then it came back down through. So now, today, it's actually crossing through again. Okay? So for what it's worth, this is what she asked for, and this is what I gave her. You know, for what it's worth, you can make of whatever you want out of that. But it does exactly what she asked for. So the point I'm making is when you guys write these scans, it'll give you exactly what you're looking for. Just be careful what you're looking for. I'm going to put a couple more of them in there. I don't know where that came from. We'll put the other two in real quick. A, B, R, S. Yeah, they're not too exciting. They don't look like a whole lot of cross going on. Does it work? Yes. Does it look good on a big down day? No, that's not too exciting. No, that one doesn't look bad. Now check this one out. Okay, this BKLN is there volume? There's decent volume. Look at this one. This one we've got a nice slow stochastics cross down here on the bottom, but this one it looks good here actually from the standpoint of it's come down for so long, and on a momentum chart with a 4-8 cross. Today was the first 4-8 cross it's had since way back. Let's see, when did it make that original cross? Way back on October 7th. So the last time it had a 4-8 cross was on October 7th. Then it came down, and it's been steady on a downtrend since. So from a momentum standpoint, it made a 4-8 cross again today for the first time since October something. However, it is at the 20-day moving average. So we don't know if it's going to get stuck there. All right. Enough about that. What did we cover? Let me back up. We went into the charts. I showed you a new chart setup. I showed you how to set up your options chain in the trade tab. I showed you how to use your market watch. Once we've got these scans written, I showed you how to write scans. This may be one of those things you may not catch this the first time. If you rewatch this video and stop it and back it up, stop it, you'll catch it and you'll like it because you'll like the features that TOS offers because imagination can go wild. You know, the wildest things you want to scan for, you can do in here pretty simply once you understand how to build these real quickly. So it's actually pretty cool once you learn how to put the lines in here. Now that's also where, like if I go in here and I put add a stock filter, I just added what did I add in there? Where'd it go? Back volume. On this particular, now it's not a stock filter. Let me get rid of that one. It's actually going to be a study filter. I had a study filter in here, and I open this thing up with the pencil, and I delete the ADX like I told you. In here is where you can check, I believe, and check on your ThinkScript editor, and this is where you're going to go bug Leonard. You're going to say, hey, Leonard, give me the code for that little scanner thing that you had, that you wrote, to tell me when the Ichimoku cloud crosses, and he's the guy that spends all the time writing those codes, and all you got to get him to do is give you that code, and you plop it right in here, and he did all your homework for you. And thank him, because he's putting a lot of hard work and effort into this stuff too, also. It's like several of us are. I was like, Moto, my scan for the open interest, I've had a few of them are wearing me out for that scan, and I haven't coughed it up yet. We'll cancel that. That's my one little proprietary thing. I still got an edge up on the room, no matter how good you are in here. All right, so we understand scans. You can go to Market Watch, and then this Market Watch, click on the tab on this particular one. I could go back into my little thing here and find that one that said Chicago 4.8. And that was the one we just went through. It was my friend of mine, that lady, that asked me to write the 4.8 scanner. This is giving me the same results as what the scanner is. If I left this open, when the market opens tomorrow, anything that was to be generated and falls into the criteria that I've defined in the scanner for this lady will start popping up in here. Some of this stuff can sit there all day long and not get anything in it. If it doesn't meet the criteria, it doesn't come up. Get a pool going. What price I ain't breaking on that one. All right, so I think that pretty much covers it for the Think or Swim. Any questions? I think some of these other guys can help you. Are y'all tired? You bored? You somewhere in between? You want one more little thing? The thing I told you originally that I'll throw in here is a little bonus for y'all. How many we got left? 43. So, oh man, we lost about 10. They probably said, oh, he's going to record it. You know what the bonus extra credit thing? All right, let me do a poll here real quick. If y'all ain't bored, this will take about 20 more minutes, and then we popped off a 2-hour class again. And hopefully everybody learned something. I don't need to take a poll. I'm going to ask you, who in this room, I know several of you have probably heard of it, but who in this room actually knows how to define, understand, execute, and play what's called pinch plays? You ever even heard of it? Nope, 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 nope. I knew you heard of it, Leonard. All right, so here's the extra credit. Let's talk about what a pinch play is. All right, I even got a chart for it right here. Actually, the chart's already up. In the old days, now Leonard's going to be going, oh, Moto, come on now. You got to give me this. You got to give me this. I got a few more tricks up my sleeve, and I don't know if you even have this one. Before Think or Swim was around, with all their little easy peasy strategy building stuff, they had a program called Strategy Desk. And Strategy Desk is what made you have to learn how to do this stuff like I did, which is what has allowed me to be able to teach it. In Strategy Desk, this is one of their old platforms. You guys can't get it anymore. I still have it. I used to do classes, and if you beg them, do you still have it? I figured you did. I used to do classes for them on this stuff, and I could teach their people how to use Strategy Desk. It's their old school scanner setup that they stopped using and they don't support anymore. You were in one of my classes? I was in one. Leonard, were you in one of my classes on Strategy Desk? Really? Dang, that was a long time ago. Is it one of the other rooms I mod? I thought I knew you. Yeah, actually, I thought. Okay. Yep, I remember. All right. If a while back, a year ago, if you begged and pleaded hard enough with TD Ameritrade, they actually have to step your platform back to give you this strategy desk thing, and they don't hand it out. The first thing they cough up is we don't have any technical support. We don't have anybody that knows how to run the thing or blah blah blah. They can't help you with is what it amounts to. I actually can. So what I've done here, what a pinch play is. Let me show you my stock charts thing again. Where'd that thing go? Let me find one here. ARRY. All right. Actually, let's see what's here. ARRY. Whoop, like that. ARRY. All right. Look at this chart. Okay. What a pinch play is a glorified, better version, more technical version of what you guys have heard as a dead cat bounce. This is just structured a little better. Um, it's typically stocks that have gone down for quite a while and or have just gapped down. Say they lose on or miss on earnings and they gap down, or they fall down for a while and they gap down, or they fall down for a while. Um, what happens is, if you'll look, I've got the MACD set here. If you look at your black MACD, see how it's curving down here? All right. Underneath that, you can put the ADX. A lot of people, when you talk to them about if they even understand what a pinch play is, they use what's called a PPO, which is a price percent. Let's see, what is it? Percent price oscillator, something like that. It's a PPO percent oscillator. All right, that's typically what people use, but most people do not understand that a PPO, the oscillator, and a MACD are identical to each other. MACD gives you histogram blocks, but if you laid a PPO, you guys probably, none of y'all knew this. If you lay a PPO on top of a MACD, they match exactly. So whoever came up with the second one got beat out by the first guy. They just don't know it. All right. So look at the two black lines here. I'm circling them on my stock charts. Can y'all see these two black lines? See how they're coming together really tight here? That's called the pinch. Okay? What's happening is the MACD and the ADX are pinching together. There's consolidation coming in here, okay? They're pinching, and the tighter that pinch gets, the more likely it is to make a move out of there, okay? However, let me get off my 4.8 real quick. I don't want that 4.8 that I built. Let me put that back to a 50 and a 100. All right. There's a couple characteristics. Are y'all following me on the little black lines squeezing together in there? You see where they're squeezing? See where they squeezed back on October 1st? See where they pinched? Where they pinched tight like that? Y'all seeing that? Okay. That's what is happening when you see someone talk about a pinch play. Here's the difference between what you're going to understand in a pinch play and what they understand. They see the pinch. Some people are capable of identifying the pinch like this if they have the right chart set up. In fact, I'm going to give you a screener that I wrote in FinViz, and this will get you started. All right? You may have to copy this and paste it. Yes, you're going to have to copy and paste it. What that is that's a simple scanner that I wrote in Think or Swim that has some of the criteria met for a pinch play, okay? It's going to find you some of them. Your next homework then is going to be to put them in this chart. I'm going to copy you this stock chart. You're going to want to put them in this stock chart and look at them and see how they look. Okay? Get that out there. There's the first FinViz link I gave you is a pinch play scanner. The second link that I gave you is a stock charts pinch play acknowledgement chart. It's going to show you the pinch play. Now, here's the catch. Here's what most people don't know about pinch plays. There's some certain technical things that go along with it. The most important thing I'm going to tell you is the biggest portion. Now keep in mind, I already told you, a pinch play is a chart play that is a technical pattern setup where the stock has gone down for a long time. If you look at that FinViz one I gave you, all those have gone down, as you can see. Some of them have gapped down, okay? That's the first criteria that has to be met for it to even become a pinch play. Then they move sideways, they consolidate, okay? That's where you're seeing the pinch. That's the two black lines coming together. That's your pinch. Now, a lot of people say, oh, that one's pinching, I'm getting in it. A couple things to keep in mind. If there's stocks, one of the other things you can do, if I got some buddies in rooms that do nothing but play pinch plays, and there's a couple reasons why. They know some of the, once the handful of 5 criteria are met, they usually work, assuming the next day is a green market day. Keep in mind, these companies are coming off of being on a hard downtrend or a gap down, they're not likely to beat a down market the next day. It just doesn't happen. On this one, particular one, Rebecca, if you'll look at my stock charts on ARRY, you can see that the pinch on the black things actually kind of started a few days ago, okay? Kind of started. It's pinching tighter and tighter today, okay? Now, here's what you want to look for, and this is why I brought up the strategy desk screen that I showed you, because I took even more of the homework out of this thing for me. Because if you take your FinViz screener that I gave you, and you go and plug each one of those into the stock charts thing, you're going to see they're all somewhat of a pinch. And you're going to say, well, how do I know which ones to play? You know, I heard someone else talk about a pinch play, but he didn't tell me which ones are really ready to go. Okay, there's 5 things that have to be met. Well, I don't want to have to meet those manually every time. So what I did in Strategy Desk is I wrote the formulas a long time ago. I wrote the formula for it to tell me when the criteria is met on the pinch plays. Okay? And then I run a scanner in it, and it will give me ones that I know are ready. Now, what am I going to do for you guys? I can't get you the strategy desk thing anymore, even though I have it. Because I have it, I didn't bother to write the scanner in Think or Swim. When I can put together the time, I'm going to try to write the exact same scanner in Think or Swim that I wrote myself in Strategy Desk. So it finds pinch plays that are actually ready. Okay? You wore out. Go to bed. It's being recorded. You don't have to watch it tonight. All right, so let me tell you what criteria has to be met for you guys to become a star pinch player versus anybody else that you can run into that even knows what a pinch play is. Here's the most important thing I'll tell you. 95% of the time, a pinch play will fail at the 20-day moving average. Write that down on your forehead. Or write that down on your screen or etch it in your desk. Most of the time, a pinch play will fail when it runs into resistance at the 20-day moving average. What does that do for you? Okay, I got buddies that play pinch plays, and that's all they do because they get really good results with it. Because they know all the exact criteria that has to be met. And when it's all met, your odds are so favorable, that's what they play. But they also know that they almost always fail at the 20-day. So what works really nice is if you become a pinch trade player and you understand the strategy, you know that once it gets to the 20-day, you will win most times if you short that stock because they usually fail. Why? I'm not sure. A lot of them will stop and go sideways. Some of them, I say a lot. Some of them will stop and go sideways. They will always consolidate a little bit, and then they may go through the 20-day. The majority of them do not. They fail. So I got buddies that play these pinch plays. They find the technical setup that's exactly right, and then they short them at the 20-day, and they win a lot. That's all they play because the strategy is set up so technical for things to be right that they're on the right side a lot. All right, so let me tell you a couple things that are important that you need to know. First thing, go down there on the very bottom and look at my slow stochastics. Okay? If you want to increase your success of winning with pinch trades, a overbought, oversold scenario, the level lines are 80 and 20. Okay? If you will be disciplined enough to wait for the black line on the slow stochastic to cross above the red line and tip its head above the 20 level, that's the first thing you want met for a pinch play to probably work. Okay? You want the black line to cross above the red line and the black line to stick its neck above the 20-day low level line. That's the first thing you want met. So you're already one step ahead of anybody else that even knows what a pinch is. Go up to the green line, the D plus. You want the D plus, that green line on the ADX. Remember the red one's the D minus, the green one's the D plus. You want that to be turned up, okay? You want that to be poking its head up and headed upward. If it's flat, if it's turned down, the pinch is not ready. So there's the second criteria you need met for that pinch to be ready, okay? Third one, you look at the pinch lines. If you pop one of these things in here and you go back to like November 1st and that's what the MACD and the ADX look like, that's not pinching. So the third thing you want met is you want this thing to be tight. You want these two black lines to be squeezing together tight. All right? The next thing, a lot of people forget about this one. You want increased volume to come in. You want the volume higher. And you're gonna, it's kind of like the scanners I showed you how to write in Think or Swim. You're gonna say, geez, Moto, if all these criteria are met, can you even find those? Yes. You don't find do not find near as many on a big down market day. Because like I told you originally, these things do not beat out a down market because they're already beat up stocks. But on a decent bullish trend, if we get a half a dozen days in a row where the market's up, you will find some of these that set up perfectly, okay? You will see that the black stochastics is crossed above the red. It's tipping above the 20. First thing has to be met. The green D plus is turned up. Second thing has to be met. The two lines are pinched tight together. Third thing that has to be met. The volume has increased. Fourth thing that has to be met. And the final thing, the fifth, I told you there are 5 things to look for, is you want to look at how much range there is left in it before it gets to the 20-day. Because like I told you, the majority of these things will fail at the 20-day. So if this thing is pinching and everything is set up perfectly like it needs to be and all of the criteria is met and it's at $4 and, let me slide that just a bit, it's at $4.29, and you say, oh, there's a perfect pinch play based on what Moto said. Well, yes and no. At $4.29, it became a perfect setup. However, if it was trading there at $4.33 is the 20-day, the likelihood of it not going any further is really high. Okay, so it's probably going to fail. Now, in this particular case, we've got one here that's at $3.99, but not all the criteria are met. You have to be really disciplined. If you want to become a successful pinch play trader, you have to be disciplined. I don't know how successful one of my buddies trades these things, and that's all he does. Here's something that we discovered together. When you find all 5 criteria met on a pinch play, usually the next day when the candle opens, they do not dip it. They do not wick the candle. They start with a full candle body and they go from there. So what he's able to do is he is able to, in a bullish trend or a good green market trend, he's able to go in the night before. He has my strategy desk. My strategy desk, what it's doing is it's finding all the 5 things I just told you for me. I'm not having to do that at all. I wrote the formula for it to tell me when all that criteria is met. Real simply, by scrolling through the list that it gives me. Okay? I'm going to do it real quick when we get done here, and boom, you guys will spot one if you've been paying attention. He knows that most of them do not wick. They just start with a full candle body. So all he does is he runs this strategy desk scanner every night, and he scrolls down through the list, and he takes the half a dozen that may meet the criteria, and he picks the best ones, and if there's 5 in there, he will put an open position in those plays if they meet all the criteria, pre-market the next day, okay? Or even in aftermarket. He will put those plays in play with a couple percent stop. And his success rate was really high because, like I said, quite often if the market is green, they open and they go. They don't dip a wick. So even with a 2 or 3% stop, his success rate out of finding 5 or 6 or a handful of really, really good pinch plays that are ready to go was good. And by putting them on prior, he was able to catch most of the ones that were ready to actually go and run. And he'd catch that run right from the beginning because they wouldn't wick that candle down and dip him out of there. And he's actually done really well with this. So there's people that like this type of structure. That's the reason I'm showing you. They like to be able to say, okay, no, that's a kind of a cool concept. I'm going to try that maybe. And you look, and when you find the handful that meet it exactly, no, it's not an option strategy at all. All it is something, a little extra credit I want to throw y'all because I knew there was probably, other than Leonard and maybe Lloyd, probably no one in this room that had ever even heard of this. But there's this kind of stuff going on, and there's traders out there that play just this kind of stuff because it has structure to it. It has to develop a certain technical pattern setup, and when it does, the probability of success is pretty high. And when you put those odds all in your favor and you're disciplined enough to find those, you're getting a lot more wins. And it's really structured. It doesn't require a whole lot of research on your part and homework, and you're out looking and you're looking at Amazon. What are the options? None of that's going on. You just do a simple scan. You look at them, you say, okay, there's only 3 of them today. I'm going to get in all 3 of them. I'm going to put a 3% stop. Tomorrow morning it opens. The ones that work, they run. The ones that don't, they stop you out. And it's just it's a repetitious thing, and you do the same thing over. But a couple of my buddies actually do quite well with it because they know when the ones are ready, and they know to get in them the day before or in pre-market. And the ones that are going to work. The ones that don't, they get a minimal stop out and they're done. Next day they rinse and repeat. So it's a real simple trading strategy to have pretty high success with it. Did I lose y'all on that? I'm going to do one quick scan. I already ran the scanner. And this thing that I've got here, this strategy desk, it's dynamic also. So during the day, it refreshes itself and starts from scratch. And it will put new stuff in it as it shows up. All right. Last thing of this class, and we're going to wrap it up. What I'm going to do is I'm going to start at the top here. What you're seeing in this thing is a series of boxes. On the left side, it only lets you put so many tickers in one box. So the top box is, I believe, the NASDAQ A through M, and the next box down is the NASDAQ N through Z, and the next box down is the New York Stock Exchange A through L. So I've got to put them in segments because they don't let you put more than a certain amount of tickers in a box. So what I got to do is I just leave this thing running, and it repopulates itself during the day, and at night it has a final scan, and then the next morning it'll repopulate. So it's constantly dynamic, constantly updating itself. All I've got to do is look over here on the right side of my chart. Because of the formula I wrote, they're all going to show the pinch. Okay, you see where I'm circling 2 black letters or lines? They're all going to show that. All I've got to do is scroll down through here and find the ones that have, number 1, the stochastics crossed, where it goes above that little blue line. Number 2, the D plus green is turned up. Number 3, the pinch is tight. Number 4, the volume is higher. Number 5, it's got a ways to go to the 20-day. So each day, if I decide to be a pinch trader, which I used to do a lot of these, all I got to do is scroll through this list, which I'm going to do real quick. I want y'all to look at the right-hand side of my screen that I'm sharing. Let's see. Yes, it's shared. And I want you to stop me when you see one that looks ready, based on the 5 things I told you to look for. And now keep in mind, I told you they have a little tougher time on a down market day. There's the first one we found that's close. See the stochastics is at 21. That's crossed the black over the red one. That's criteria is met. The D plus is turned up. The pinch is tight. It had some increased volume come in. Okay? It has it's at 399, and the 20-day looks like it's hard to read. Looks like it's at about 420. Not bad. I wish it had a little bit next. It's at 433. I would probably wait on that one tomorrow to have one more little update, and then it will really meet the criteria. And then if it has an update about 308, 310, it will show up in here again, and everything will 100% be met. And I know that I can play that thing to 433. Well, there's the first one we came up with that meets the criteria. You guys can write that ticker down if you want. It's close. I'm going to keep on scanning through here. I've done this a million times, so I know exactly what I'm looking for. This is what it entails. You guys see that one? It's not ready. It looks like it wants to, but it's not ready. So now for me to become a pinch trader, and if this is all I want to do, all I got to do is scan through these real quick each day like this, and I will find the ones that are ready. I haven't found one yet. All right, that completes the top box, which is the A through L's. I'm going to go to the second box. See if we find one. Like I said, you don't find a lot of these because they don't battle a big down market day. They're just beating up stocks, so they don't do it. Oh, let me go back to that one. Close. Didn't. What are we missing here? Let's see who's listening here. If all 5 rules are met and the market is green the next day, you're pretty safe going long on it. 2 to 20 day. All right, y'all see this one here? This is the one that usually catches people. The D plus hasn't really turned up. It's kind of flat. We're only at 16 on the stochastics, not quite there. And the one that most people miss is the volume. It didn't have volume come in. So it had an up day today on relatively flat volume. They're not going to run if the volume doesn't come in. All right, so I'm going to keep on scrolling. You want interest level up. You want volume to come in. Okay, so that's the end of that one. So as you can see, I've made a simple process for me to find them. Let me look at that one again. Nope, not ready. Volume didn't come in. This scanner is finding everything that falls into the criteria I want met. I just have to scroll through the results it gives me and see which ones are actually 100% there. And I would be surprised if it's not. Let's see what we got here. I don't know. The stochastic is crossed. The D plus barely turned up. The pinch is really tight. Not sure if you could consider that volume coming in. I mean, if that candle was, yeah, that candle was up there in the 3 million, 4 million range like those other ones, this would be a perfect pinch. It'd be $20.84, and the 20-day moving average is up here at $25 and change. That's got $5 upside to it. If that volume candle right there was up in about here in the 3 million, 4 million range, this thing would be a dead-on pinch play. It would have, number one, if it would have got that volume, it would have made the D plus turn up more. And the stochastics is already ready. The pinch is already ready. All it lacked was volume. Volume coming into this one, and you could trade this thing for $5 upside. All right, that's it on that one. I'm going to go to the next one. See what we get. And because you guys can't actually get this strategy desk one, I have it, which is why I didn't take the time to write one in Think or Swim, because I have it. But if I get really ambitious here one day, I may write one for the room. That one's not too far off. If you're very disciplined, you'll see that the stochastics are only at 14. We want it above 20. So that one is close, but it's no cigar still. I would be actually surprised if we actually found a really dynamic or dynamite one today with the market being down so much. Let's see. That one tried. That would have been a decent penny stock. That would have been decent if it had held on to it. Let's see what we got here. Nothing. And I'm almost done. All right, so of all the results it produced for me today, nothing in there meets the criteria. I'm not surprised with such a big market down day. Like I said, these are beat up stocks. They're not going to want to go against a down market and say, hey, we're the tough guys here today. We've been beat up for 3 months. We're going up today on a big down market. It's not going to happen. So didn't find anything in there but that ARRY. It had reasonable potential, but I didn't find anything in here that there's been other nights I've done a class on this thing where I've said, hey, this one's spot on. It's going up, and they do. Tonight's not one of those where we're going to find one. All right. I'm done. That's it. 2 hours, 6 minutes. Lloyd recorded it. I appreciate everybody showing up. Numbers are fading off. Hey, the online numbers, I like that. 34, my number. That's it for me. I'm going to get off the mic. You guys got any questions? I can answer them. Lloyd probably went to sleep. So I'm going to get off the mic. I can actually stop the. No, Lloyd's still up. He can stop the recording. Hey, we did a little better. We're 2 hours tonight. We were 2 hours and 15 minutes on the last class, and we would have been shorter if y'all wouldn't have asked for the little bonus thing here. Anybody like the pinch thing? Does that interest anybody, or was that just a exercise on my part of wasting time? All right. Well, I'm going to kill the mic. Lloyd, if you want.